Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Sumera Abdi and Pavitra Pare. Good morning, girls. Friday feels good.
Friday.
Friday. Absolutely. But for the markets, the benchmark indices are a bit subdued, struggling. We're down about 0.1%. But the midcap index is roaring. The midcap index is at the high point of the day. It's got a gain of about 0.5%. And this week itself, we've seen the midcaps outperform. So week to date, the Nifty is down 0.2%, while the midcap index is up 1.8%. So the midcaps have clocked in an outperformance of nearly 2% for the week. It's autos which continue to be in the front seat. So the Nifty Auto Index is at a fresh 52-week high. It's rallied 3.2% this week. So it's been the clear outperformer. And names like M&M are at the day's high with a rally of close to about 1.5%. HDFC Life has seen a spring in its step in the last 30 minutes of trade. On the losing side, Hindalco continues to struggle. Hindalco is down nearly 6% for the week. Today as well, Hindalco is down nearly 2%. And Shree Cement, post the announcement of its exclusion from the Nifty, is struggling with a cut of 2.5%. Hi.
Hi, good morning. So like you said, it is quite quiet on the surface, but there is a lot of action underneath in some of these individual stocks. So Reema's already mentioned the auto pack, something like a Reliance, ONGC. In spite of them being so much under pressure, the market is holding up quite all right. And in addition to the steel stocks, some, those ones will be up on your screen. You also have the entire future group of stocks, which is struggling in trade a little bit today. So those ones will be up on your screen. The likes of future retail, future enterprises, all of these seeing some cuts right now. But, it is seems to be quite a wait and watch mode ahead of the non-farm payrolls data that we'll get today. So looks quite ahead of that. So Sumera, hi.
Hi, morning. So let's get started with all that we have lined up for you today. And, there's quite a bit. It's seesaw trade on D Street, metals slide, IT and pharma lag. Autos are gaining for a second day and midcaps are outperforming. We'll be joined by Sunny Agrawal of SBI Securities to talk about the market and the key sectors to watch.
Galaxy Surfactants is in focus. Edelweiss is positive on the stock and expects the company's U.S. business and easing of input prices to aid margins. We'll be joined by the management of the company to discuss the business outlook, diversification, roadmap and more.
August turns out to be a mixed bag for the auto industry, with CV sales in the slow lane, even as passenger vehicle sales saw strong growth. We will bring you a roundup of the highlights and the key trends, and we'll analyze all of this with Ashwin Patel of LKP Securities.
NTPC and BEL buzzing in trade today. Later on the show, we'll tell you what's driving these stocks. All this and much more in the next 60 minutes. But first up, let's get you the big story on Trading Hour. Auto sales for the month of August were a mixed bag. My colleague Sonia is here standing by on the big wall with an interesting analysis and the trends that stood out in the last month. Sonia.
Well, thanks a lot for that. So, the auto sales for August are out and there are some interesting trends that I have observed. The first big trend that I noticed is that the commercial vehicle sector growth rate has slowed down sharply compared to previous months. This could be due to the base effect wearing off, it could be because of the monsoons, but growth has slowed down to low single digits. Let's take a look at the key players. Tata Motors saw just a 6% growth this time around in its CV sales. Eicher Motors was even lower at 4.4%. And Ashok Leyland saw 51% growth, but this was on the back of a low base. Now, the next big trend that I noticed is that there's been a sharp fall in two-wheeler exports in the month of August. So let's take a look at the big players here. Bajaj Auto saw a 28% year-on-year fall in exports. This was primarily because of the Nigerian retail sales that sunk about 25 to 30% for Bajaj Auto. Remember, about 20% of Bajaj Auto's export volumes comes from Nigeria. Then let's take a look at the, the other players as well. There was a fall actually of 48%, not a rise. And in TVS Motor as well, there's been a fall of 15% that we've seen in the exports this time. The third and final trend that I noticed is cracker demand for the passenger vehicle sector. New launches, supply side situation easing and a robust order backlog aided the passenger vehicle space. So here again, let's take a look at the numbers. Maruti's domestic passenger vehicle sales were up 30% on a year-on-year basis. It was an exceptional month, a solid 87% growth on a year-on-year basis for M&M because of their new launches that did well. And Tata Motors passenger vehicle sales went up 68% year-on-year. The electric vehicle sales were electrifying, so to speak. It's 276% year-on-year growth because of the Tata Nexon sales.
All right, Sonia, thanks a lot for getting us the roundup and taking us through all of the key trends that we've seen in the sales figures coming through this month. In fact, we also spoke to the managements of Eicher Motors as well as Bajaj Auto on the sales. So let's listen in to what they had to say.
The month of August, there is also impact of monsoons. So I think it's that. Otherwise, CV industry per se is doing very well. And we are expecting good growth overall for the year. If you look at first 5 months, we have sold 28,500, and which is 91% growth over previous year's first 5 months. And if you look at the industry has grown by 88%. So we are doing better than the industry. If you look at the overall industry sales, I think this year, in balance 7 months, if we project based on the last year's 7 months, and if you add some nominal growth in that, I think we will be quite close to the earlier peaks of 18-19. This year, first 5 months, we are at 25%. So we are consistently gaining in the bus segment.
Decline in numbers which you're seeing in export sales is not really the outcome of Egypt. If you may recall, we had said that there are developments in Nigeria and a few other parts of Africa, but particularly Nigeria, where retails have slid downwards for 2 reasons. One is, of course, there is inflation and lower availability of dollars, but there is also an uncertainty due to certain pronouncements by the government of government of Nigeria restricting the movement of motorcycles. The Nigerian retails have shrunk by 25 to 30% for us. And what happens in that is that we like to take a prudent view because it's a long supply chain. And if these retails continue at this level, we don't want overexposure of our distribution partners in terms of stocks. So this month has almost been a nil month of exports to Nigeria, so that we take the hit and get the process of getting the stocks in balance. So it's really that one issue. And of course, the Egypt issue, which is a much smaller one when it comes from when you look at it from a number point of view.
Okay, let's take this forward, the August auto sales numbers and also the outlook for the sector at large. Joining in is Ashwin Patil of LKP Securities. Ashwin, of course, tracks the sector very closely. Hi, Ashwin. Morning. Thanks very much for joining in. This month, what is it that's standing out for you more? Is it the slowdown in the CVs or the expected continued rise in the PV sales?
Well, the PV sales have been the star performer of the month, as we all have seen. The order backlog is very strong. The new launches that the companies have been doing, they are panning out well for them. And, I think that this momentum should continue at least till the festive season ends, that is by November or, by December. I think the PV sales should do well. And after that, there should be a big leap in the numbers because the chip shortage issue is getting sorted out. And I think that by the festive season, most of that should get sorted out. At least 85 to 90% of it should be resolved. And post that, the order backlog that the companies are having, they should be able to cater to them quite easily. And therefore, FY23 and 24 should see a very good, a growth in the PV sales, on an overall basis. So that's a top performing sector within the auto industry, I would say. Then the second, highlight, I would say that, maybe this, the CV sales getting slowed down in the month of August. That trend may continue going forward also, because the H2 of FY22 saw some sort of rebound in the CV numbers, and therefore on the high base of second half of FY22, I think the numbers should slow down a bit in the second half of FY23. But on an overall basis, FY23 should be a good year for CVs, because the fleet utilization rates are improving, the freight rates are moving up. The infrastructure, the agricultural demand, everything is moving up. So I think that, there is nothing to worry as such because of the slowed down sales numbers in the month of August. Maybe because, the base was a bit high last year. So as I said, second half may see some sort of slowdown in the CV sales growth, but overall FY23 should be quite a good year for them. Then on the two-wheelers, it was not a surprise because we have seen exports declining, quite heavily since the month of June or July because of the Nigerian underperformance and the weakening of Nigerian naira over there, and the retail, this demand is also moving down. And Nigeria is a very big, contributor to the exports of like Bajaj Auto or TVS, and that's why this kind of sales numbers are seen. But the most heartening thing is the domestic two-wheeler numbers that we have seen. The demand is moving up. Things are coming back to normalcy. The COVID is behind everybody now, the sentiments are improving. So after 2 bad years, I think this year is quite a joyful year for the two-wheelers, I would say. So this year, even two-wheelers will be reporting quite good kind of numbers in FY23. And I think the trend should continue in FY24 as well, with the EV scooters getting launched and overall demand coming up with new launches from their stable. So I think it's overall the numbers were not that bad as they are, portrayed for the month of August. But there were some little bit concerns because of the high base, etc., and the exports because of Nigeria. Otherwise, the numbers were, good according to me.
Ashwin, hi, morning. Getting into the specifics about individual companies. Now, Tata Motors was a big outperformer last year as well as at the beginning of the year. But since then, it's just fallen off the cliff. And now, on a year-to-date basis, M&M is up 58%, Maruti is up 22%, but Tata Motors is down 3%. What explains this kind of an underperformance, and do you think there is scope for it to reverse? How is the risk-reward looking, particularly for Tata Motors, post the recent underperformance?
See, Tata Motors is in a different league altogether because Maruti and M&M are both majorly domestic players, but Tata Motors, a big chunk comes from JLR, which is always under some sort of pressure from either of the countries where it is operating. Like in China, you never know when the COVID upsurge, emerges once again. And even in Europe and UK, because of the slowdown in the economy over there, and some concerns, in the rest of the world countries as well. Because of that, Tata Motors is always under pressure. But domestically, even if they perform well and even better than its peers, I think the more focus is on JLR because that's a major contributor. About 90% of its profitability comes from JLR, and therefore I think that's the major setback. I won't say setback, but one thing which is pulling it down at any given point in time. So one geography is performing while the other is not. That's the trend given at any point in time, and therefore I think Tata Motors is one of the underperformers that we have seen over the past 1 year.
All right. Hi, Ashwin. Good morning and thanks for joining us. If I can also ask you about the tractor sales that we've seen. I mean, I know we had a delayed monsoon, but do you think that this is something that maybe the numbers will now start reflecting in perhaps the September sales?
See, Tata Motors, the tractor sales, I would say that, there has been some concern over the spread of monsoon, like in some of the eastern states, like UP and Bihar, etc., eastern MP and all, which contribute more about, a big number, like 20 to 25% of, the tractor sales in India, and which is a major paddy growing region for India. I think that is one of the concerns why the tractor sales are not performing well. But as we all know that in those regions the monsoon is aggressive only in the second half of the overall monsoon period, that is August September. So we can definitely hope that any revival over there should help the tractor sales to move up. But otherwise, on a higher base of last year, and the farm area that is under cultivation is also expanding. So I think that there is some sort of steam left in the tractor sales. But nevertheless, I would be expecting the tractors to post close to about 3 to 4% kind of growth only in this year.
Ashwin, thank you very much for joining in and explaining the big trends taking place in the auto numbers. But he's broadly bullish on all the key segments for the next couple of months, FY23 as well as FY24. Get into a break. Up next, we'll get chatting with K. Natarajan of Galaxy Surfactants on the show now.
General insurance companies, what they've sought from the regulator is a composite expense of management ratio.
The recommendation was there that why don't we have a single cap on the limit of expenses on management. So we have examined that report and accordingly a draft exposure has been put out.
Relaxing or removing the condition that private equity players can only invest through a special purpose vehicle or SPV.
Very soon we will finalize whatever we have to do as the private equity funds are concerned and the SPV, whether that is required or it's not required, can it be done away with. All of those are under deliberations.
IRDAI is considering giving a composite business license to existing as well as new insurance companies.
Composite license is not really an obstacle as far as insurance penetration is concerned. We need to amend the statute. So we are in discussion with the government. So at the appropriate time, the government will take a decision on this.
Welcome back. Let's now invite the first corporate on trading hour today, Galaxy Surfactants. Edelweiss says the company witnessed strong price-led growth in FY22. The brokerage now expects easing raw material prices to support the company's margins going forward. To discuss how business has been shaping up and the outlook, we're now joined by the Executive Director and CEO of the company, K. Natarajan, on the show now. Morning, and thanks so much for joining in. This is Rima here. Now, raw materials have been a big worry for the entire industry now. And you also told us in your earlier interactions with us that it's been impacting margins. Now, have prices softened and what is the outlook on margins?
Good morning. Thank you for having me on the show. So yeah, raw material prices have started correcting over the last about 2 months. But then we also know that it has started going up and then we need to see how it stabilizes. But it's certainly in a much better situation what it was 6 months back. And we do hope that if this sustains, I think the inflation-led impact on the end consumer volumes should start recovering. And that's what we are hoping. And we hope this particular situation of prices coming down continues and sustains.
All right. Good morning, Mr. Natarajan, and thanks for joining us. This is Pavitra. So you're saying that prices have softened a little bit. Of course, we'll have to see sort of at what levels they stabilize. But what kind of margin figures are you working with for, the full year? You had around 12.8% for Q1. Considering the fact that prices have softened, what kind of figures can we expect?
Yeah, see, what we have, there are two aspects to this. One is in terms of how we are able to manage the risk positions in terms of various feedstocks as the prices are coming down. So we do have a very robust risk management framework in place. Keeping this in mind, what we have guided the market is towards our EBITDA target range of 16,000 to 18,000 per metric ton. And we would want to be at the higher end of this band of 18,000 rupees per metric ton. What is also critical is the volumes have to be standing up well, given the inflationary situation and the sort of demand cutback that most of the industries are talking about, and even our customers are talking about. We need to see as to how that shapes up because volume degrowth is something that's also going to have an impact in terms of the numbers of EBITDA that we'll be able to deliver.
Okay. Hi, Mr. Natarajan. So in terms of product diversification, I believe that is going to be a priority focus area for you. But given that this kind of curtailment of demand that you mentioned, which is also likely going forward, how are you looking at introducing new products? And the ones that have already been introduced, by when are they likely to start contributing significantly?
Yeah, some of the products that we introduce, typically our product, approval process for any new introductions take almost about anywhere from 15 to 24 months. And some of the products that we introduced, say, almost 2 years back, customers did start introducing into their formulations. But there are some amount of projects that did get postponed because the customers want to be introducing new products, new formulations when the demand situation is robust. Given this uncertainty on the demand side, some of the launches have got pushed. And also in terms of the new products that we introduce and what got a good traction over the last 6 months, we need to see as to how it sustains. Given the volume situation doesn't seem to be too optimistic. At the same time, last year, I think the volume situation was pretty optimistic. With this sort of inventory correction that is happening across the board, we do see that that's something that we need to watch out for. But yes, our product introductions are pretty much, the projects in pipeline are pretty healthy. And we do hope that, the things start turning around for our customers to introduce those products in a very aggressive manner into the market.
So you're sounding very cautious on demand. I think you've used the word volume degrowth, inventory contraction, customers holding back multiple times in this conversation. Can you talk a little bit more about the extent of volume degrowth? By how much have customers, cut down? Perhaps they're spending with you.
Yeah, see, if you look at our first quarter of this financial year numbers, our volumes degrew by almost 7.7%. We grew in India ahead of market at almost 3%. But what degrew significantly was our Africa, Middle East, Turkey volumes by almost 22%. And our rest of the world volumes were about 6%. So this is reflective of what sort of situation that the Africa, Middle East, Turkey countries in that particular region are going through. Given the high food inflation and the high interest rates and the currency depreciation significantly, this certainly is something that has already panned out in the last quarter. And we do expect
guidance for FY23, the volume degrowth guidance.
See, what our volume growth guidance has been in the 6 to 8%. Okay, because our objective is to grow ahead of the market. The global demand growth has been anywhere close to 2%. If you look at it. So now, for us to be hitting even the lower end of the 6 to 8% growth, we do expect things should start looking up well, say at the second half of this financial year, and that would enable us to be there at the desired level of at least 6%, which is the lower end of the volume growth that we have guided the market to.
Okay, Mr. Natarajan, in Q1, we also saw the Africa, Middle East region. That was the geography which was worst hit. It was down around 20%. Can you tell us how things are there now? Is it looking slightly better or, do things continue to be that subdued?
No, we are seeing some green shots, but then it needs to sustain and it needs to start getting back, to the base level in terms of growth. And then from there, we look at the growth happening. So this is certainly something that is not going to turn around in a quarter. Even earlier, when we had a similar situation 3 years back with the Egypt market degrowing significantly, it took almost 6 months to 9 months for things to get back on track because the consumers need to adjust to the new inflationary situation. And the benign, the sort of correction that we're seeing in the oleochemical prices and the edible oils should augur well in terms of the inflation coming down and that supporting our consumer demand in these markets.
And how much does this area contribute to your volumes?
See, Africa, Middle East, Turkey contributes about 26 to 28% of our global volumes.
So can you tell us, after a volume decline of 7.7% in Q1, you would have to grow very fast to report a full year volume growth of even 6%. That means things have to start turning around from the current quarter. How has Q2 been the first 2 months of Q2, July as well as August?
So what I said was, our objective is to grow ahead of the market. So if the overall global market is going to be degrowing, then obviously we need to see as to whether our growth is in line, with how the global market is panning out. So if you look at it, our desire is to be growing at about 6%, but the external environment needs to be conducive. We do see some, green shots that are visible now. So we are keeping ourselves optimistic in a very cautious way. And we hope that things are turning around. And once things are turning around, we are well positioned to be able to take advantage of the surge in the demand numbers.
So the July-August volume growth for you?
That would be something that I would not like to be talking now, because I think I would like to say that once I'm in the call after we announce the results.
All right, we'll chat with you then. Thank you very much, Mr. Natarajan, for joining in. That's Galaxy Surfactants for you. A bit cautious on the volume front, hopeful that things will turn around. As of now, he's sticking to his earlier guidance of 6 to 8% on the volume growth front, but volumes will be at the lower end of their guidance. But that, again, depends on things turning around for the company externally as well. Get into a break on that note. When we return, we'll discuss market technicals. Mitesh Thakkar of earningswave.com joins in.
Hey guys, welcome back. You're still watching Trading Hour on CNBC-TV18. For the market, it is quite flat, around 15 points in the red as we speak. It is the mid-cap index where you're seeing a bunch of the gains come through right now. So it is 0.4% higher on the mid-cap index, and the Nifty Bank also looking quite flat, around 40 points in the red. So it's a good time to get your technical check on this market. Mitesh Thakkar joins us now. Mitesh, good morning and thanks for joining us. So, I mean, it looks quite flat right now. Of course, the mid-cap index is holding up, but on the Nifty, we're seeing a cut of around 20 points right now, very flat. Take us through how you would approach it today.
Yeah. Good afternoon. I think my understanding is that market is now entered something of a contraction kind of a zone, wherein you will see consolidation. Most likely between 17,750, 800 on the upside, about 17,400, 420 on the downside, which is the 20-day exponential moving average area. So I think broadly it is a market which will consolidate and try to absorb and consolidate the gains which we have seen for the last 1 month or so. And then, once this consolidation is over, then I think you will see some kind of a breakout on the upside. My bias is on the positive side, looking at the medium-term charts. Having said that, in the short term, I have one buy and one sell as a trading idea. Delta Corp is breaking out with volume, so that's a buy with a stop at 211.5 for targets of 225. And ONGC is slightly looking negative with intraday indicators turning on the negative side. There's a sell with a stop at about 135.5 for targets of 126.
Okay, thank you very much for joining in, Mitesh. Let's move on. Sources tell CNBC-TV18 that a number of bids have been received for the minority stake in NTPC's green energy arm. Abhimanyu is joining us to fill us in with more details. Abhimanyu.
Where ArcelorMittal, Brookfield, Canadian Pension Fund, NIF are among the bidders as far as the 13 bids are concerned for NTPC's green energy stake sale. It remains to be seen how these bids will be considered and what will be the amount of stake which will be divested as NTPC Green Energy remains open to raising up to rupees 2,000 crores as equity and remains open to stake sale between 5% to 26%. Also, NTPC is looking forward for listing of various of its subsidiaries, be it NIPCO or NVVN. Also, NTPC is looking at the possibility of selling off its non-core assets, particularly in the fertilizer domain. NTPC, what sources have indicated that NTPC is not going to launch any greenfield coal thermal power plant. However, it's also not going to close down any thermal power plant more than 200 megawatt capacity. It remains to be seen what is going to be the status of the bids for NTPC Green Energy, since the subsidiary of NTPC is looking forward to raise money as part of this exercise.
All right, Abhimanyu, thanks very much for that. Let's also focus on BEL, Bharat Electronics. The stock is buzzing after a bullish call that has come through from Citi, where they have raised their target price on the stock. Vahishta is here with the details. Vahishta.
Hi, thanks for that. Yes, that's right. Citi has released a report on Bharat Electronics and they have a buy rating on the stock. The target price has been raised to 356 rupees per share from earlier of 342 rupees. They say that the company continues to benefit from strong structural tailwinds in defense manufacturing. The FY23 prospects also continue to remain healthy, and the company reiterates 15% revenue growth and 21 to 23% margin target. So the medium-term outlook continues to remain robust. The company continues to see healthy order wins opportunities in the industry, and they are expanding footprints in allied non-defense areas and defense exports. Citi says that the company has been reasonably valued at current levels.
All right, Vaishal, thanks a lot for getting us all of the details. So that is on BEL. With that, we're going to get into a short break. But up next, we're going to discuss some key global market cues to track. So stay tuned. We'll get you more details when we come back.
Welcome back. Well, our markets are quiet. Globally, also things are a bit quiet. And the big focus is going to be on the U.S. non-farm payroll data, which for the month of August will be out at 6:30 p.m. India time. Now, economists are expecting that we will see a job addition slightly more than 300,000. This will be much lower than the July figure, which was 528,000. The unemployment rate is expected to remain steady on a month-on-month basis at 3.5%. Now, this is important. This data is very crucial because the FOMC meet is on the 20th and 21st of September. Before that, there are only two key economic data points that the Fed will parse through. One is going to be the jobs data, which comes out today, and then you have the inflation print, which comes out on 13th. So both these two data points are going to be very crucial. A very strong jobs data, if it comes out today, much ahead of consensus expectation, will give the Fed cushion to continue with its aggressive interest rate hikes, even at the risk of a potential recession. However, if the labor conditions show sign of moderation, will it help the Fed perhaps lower the pace of rate hikes? Will we then see maybe a 50 basis points rate hike in the September FOMC meet rather than the third consecutive 75 basis points rate hike? So even now, the debate between a 50 and 75 basis points rate hike in the September meet is still open and alive. And therefore, these two data points will be very crucial to decide whether we get a 50 basis points rate hike in September or the third 75 basis points rate hike. Remember, the Fed has already raised interest rates by 225 basis points in the last four, rate hikes. The first one was in March, 25 basis points. Then we had a 50 basis points hike, and then the last two were 75 basis point rate hikes each. And in the the Jackson Hole meet, which took place on Friday as well as Saturday, the FOMC sounded very committed to bring inflation down to levels of 2%, even at the expense of growth. So this data point is going to be very, very crucial. On that note, let's listen into some important opinion that we gotten from a host of global market experts.
We've had a total of 27 inflation indicators over the last 30 days. Producer prices, consumer prices, GDP, and even in today's ISM report. Out of those 27, 26 have been below expectations. Inflation below expectations. In fact, the price index in the ISM report this morning, the last 2 months was the biggest decline that we've seen in the price index, second biggest decline in 70 years. So only exceeded by the great financial crisis. So the inflation news is really on the ground, really coming in really well.
We have an economy that's growing very slowly. There is a sort of a rolling recession that's hitting different sectors at different times. Right now, the housing industry is obviously suffering quite a bit. Some goods producers are saying that there's been a shift by consumers away from goods to services. So I think that's kind of the nature of this beast. I don't think we're going to have a traditional recession that's caused by an economy-wide credit crunch. So I hope the Fed goes for 100 basis points at their next meeting at the end of September. Just get it over with. We're 2.5 now at the top end of the range. Let's get to 3.5. Markets are already there. That's where the 2 years at. The bond yield is basically anticipating that kind of move. So the credit markets have already tightened, done most of the work for the Fed.
What the market is looking for is to see where it's going to settle. I think one thing that's certainly understood after last week's message from the Fed chair in Wyoming, in Jackson Hole, essentially the Fed's serious about ending inflation. This is a good thing. It'll likely end a period of free money. So all in all, we've got to say market, just as you said, looking for some stability. And right now it's a little bit early in the Fed funds hike cycle that is likely to last into next year. But the longer you go into one of these cycles, the more the market likely to get the message that the Fed will be successful at curbing inflation or stemming a rapid pace of growth, a 40-year high in that. And the market should calm down somewhat.
We believe inflation peaked in June. There's plenty of evidence. Gas prices, used car prices, even 1 year forward inflation is down to 2.5%. Okay? After it was 5.5% in June. The bad news is, just like Serena proved last night that she's not done, Fed's not done, right? So we have about 80 basis points more of tightening that was priced into August, Carl. That's the reason why we're underweight stocks in our portfolios. They're shifting their focus away from inflation, which is coming down, towards the jobs market. So when the job openings tick higher, when unemployment claims move lower, and you're actually rooting for bad news in the jobs market, that's not a great place for sentiment, which is, again, why we're underweight.
All right, that is the big cue that we're all waiting for, which is going to be the Fed September meeting, and we'll see how that goes from here. But with that, we have to get into a short break now. On the other side, we'll discuss the market fundamentals. Sunny Agarwal of SBI Securities will join us.
Hi, welcome back. You're watching Trading Hour. Joining in now, we have Sunny Agarwal of SBI Securities to talk about where the market looks to be headed and also some top sectors that we can keep on our radar. Hi, Sunny. Morning. Thanks very much for joining in. First, let's talk about the market itself. Considering the way some of the global markets have fallen, our own market has been pretty okay, right, in the last few weeks. What is the upside that you see now?
Yeah, thanks for having me on the show. As you rightly pointed out, that Indian equity market has been quite resilient despite hawkish comment from Fed last week. And if we see the market, broader market that outperformed the key benchmark indices, and there is a lot of participation and up move we can see in the mid cap and small cap counter. So in terms of valuation, anyways, on FY24 consensus earning, Nifty is currently trading at around 17 to 18 price to earning multiple. And what we feel is that post, this event of Fed, which is scheduled on 21st of September, we may see market take a next leap towards maybe a new high. That's our house view. But meanwhile, in the short to medium term, we are more bullish on mid cap and small cap as a overall broader market. In terms of sector, what we like is that banking, again within banking, we are bullish on PSU banking per se because of the valuation comfort which we are getting over there. And apart from that, mid-size or small-size banks like Federal Bank, where they have reported a very solid set of earnings in the last quarter with a very healthy balance sheet and growth outlook. Apart from that, we are very bullish on consumption sector, companies like Campus, or for that matter, real estate ancillary like Century Ply, Kajaria Ceramics, and the companies and chemical companies where we can see a margin expansion over next 2 to 3 quarters, coupled with the volume expansion. So companies like Vinati Organic, NoSeal, Aarti Industries is some we are bullish on. In addition to that, we are bullish on auto ancillary as a sector. So within auto ancillary, we like companies like JBM Auto, which is, transitioning from being an auto ancillary to the auto OEM. So they are into electric vehicles. So that's one of the story which we like at SBI Securities. And apart from that, Gabriel India, which is again an indirect play on a two-wheeler EV story. So, I mean, whichever company generate sales volume on EV two-wheeler front, Gabriel is one of the key beneficiary, being one of the largest supplier of shock absorber to most of the players. So these are the, I mean, a few sectors we are bullish on.
In banks, you said you like PSU banks given the valuation comfort. Any mid-cap, small-cap PSU banks that you like?
So we are bullish on Bank of Baroda, Canara Bank, and apart from that, in a very micro-cap kind of small-cap bank, we like Bank of Maharashtra.
Okay. Hi, Sunny. Good morning. How do you look at the IT pack? Of course, you know, we have been talking about the kind of correction that we've seen in a lot of these stocks. So do you think this sector, you know, perhaps could see much more of a fall, or do you think the worst of it is already in, perhaps?
No, so till the time global recessionary narrative is playing on, especially in US and Europe, what we feel is that IT will continue to move in a sideways fashion. Having said that, I mean, a few mid-cap companies like KPIT, Happiest Mind, or for that matter, Mindtree or LTI, which are growing at a faster clip as compared to the relatively on a faster note as compared to the large cap peers. We believe there we may see a capital appreciation and opportunity to make money in mid-cap IT. But on large cap IT, we feel we are neutral as of now till the time this global recessionary narrative don't go away.
I think in the sectors that you like, you didn't mention cement. Is cement something that you are negative on? And if yes,
no. So we are not negative on cement per se. In fact, cement is one of the indirect play on infrastructure and real estate growth story of India. In cement, what we would like to see is that the commodity prices has come off, and so basically from September onwards, if we see a volume picking up, then probably we may see a next leg of re-rating in the cement company. Anyway, the consolidation which is currently going on in cement sector augurs well for the overall sector. In medium to long term, we are bullish on cement per se, especially on large cap cement players like Ultratech, ACC and Ambuja.
Okay, Sunny, do you also look at any of these newer listed companies, you know, the likes of Paytm, Nykaa, Zomato? Do anything, you know, does anything from that pack have your attention?
So, I mean, definitely, I mean, in a longer run, few of these, I mean, new age companies will definitely generate a wealth for the investor. But we have to be in a wait and watch mode, wherein what we have seen is that Paytm, or for that matter, Zomato, everyone has given a guidance to be profitable in next 6 to 8 quarters. So Street would first like to watch the performance of these companies over next 1 or 2 quarters, and then probably we may see a re-rating or the conviction buying emerging in all these new age companies. So within that, I mean, we feel that Nykaa is relatively better placed as of now, and Zomato, as they have given a guidance that they will turn EBITDA positive in next 4 quarters. Probably that is one of the space which we would like to see over next 2 to 3 quarters.
Sunny, we'll leave it to that. Thank you very much for joining in. That's the view coming in from SBI Securities. Get into a break on that note, but before that, here's a quick reminder for all our viewers. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits on Money Control app or the website.
Welcome back. You're still tuned into Trading Hour. For the market, it is absolutely flat right now. So it will come up on your screen. It's just around 7 points in the green. And the mid-cap index has come off slightly, so around 110 points higher there. The Nifty is just blinking red and green. And, you know, if you take a look at some of the IT stocks, they did open with decent gains, and they've all sort of given that up and moved off those levels. So take a look at Wipro, HCL Tech, Infosys. That entire pack will actually come up for you, and now it's moved pretty much to the low point of the day. So that's what's happening with some of these IT names which are in focus. The other pack that I'm looking at is some of the consumption stocks. So take a look at those. Some of them are holding up fine, the likes of Britannia. But you do have something like a Nestle, Tata Consumer, which have again slipped in the past few minutes. So that's what's happening with the market. We're going to keep coming back to this. But first up, let me bring you an important story. The government has amended the electric vehicle testing standards for additional safety requirements and issued draft notifications for testing norms of batteries. So Parikshit joins us to tell us more about this. Parikshit?
Well, in the month of March, after 6 or 7 EV fires, the government had set up a high-level committee. Now, the committee submitted its report on the kind of changes that India's testing criteria needs. Recently, we reported how the Ministry of Heavy Industries had allocated 41 to 50 crore rupees to ARAI to boost its equipment, get more equipment from abroad, and improve India's testing standards. And now, additional safety requirements have been put in place for battery cells, the BMS, the battery management system, onboard chargers, the battery pack design, thermal propagation due to internal cell short circuiting, which can lead to fires. All these additional safety requirements will come into effect from the 1st of October 2022. This is what the government is proposing, and the government has also sought suggestions from stakeholders. This is a draft notification at this stage. The government is also going to make it mandatory for EV makers to follow conformity of production norms. So what are COP norms? COP norms imply, and they already apply to the IC engine ecosystem, that during the course of the year, even after your initial certification from ARAI or ICAT, you have to submit your products for testing with ARAI. So now EV makers will have to frequently through the year submit their products, submit their components for testing and certification by the ARAI as well. All of this will come into effect from the 1st of October 2022. Now, there is some amount of uncertainty, confusion within the industry. Some industry veterans also feel that this could be difficult to implement within this timeline, and they may seek certain clarifications from the ARAI and the government as well.
All right, Pariksha, thanks a lot for getting us the latest on the testing norms for EV batteries. With that, we're completely out of time on the show, and we leave you with a market that is flat as flat can get. So completely, on the flat line for the Nifty, and it is the Midcap Index which is still holding up with some gains. Thanks a lot for tuning into Trading Hour. We have halftime report which comes up next, and we'll take all of this action forward.